Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the conventional fund business for the week ended March 28th, 2018. That's a Wednesday time period. We'll certainly talk about ETF flows as well. But we actually saw from the conventional fund business about $288 million come into the fund business. Second consecutive week they've actually taken in net new money. And this is kind of a weird thing because, again, it's really all on money market funds. So we'll talk about some of the negative things that have been going on. And it's really had some good economic news that we've been taking a look at. We had a final on fourth quarter GDP coming in. It came in at 2.9 rather than 2.8. We saw home sales that were basically above 3.1% for February, above analyst expectations. Overall, it's been good and economic news, but really at the forefront, we've heard two things. Trade war, and trade war used to be the idea of steel and aluminum, and this time it was really about technology issues in China, and we also started talking about Facebook and the idea of the Cambridge Analytica debacle that's going on right now, and really has taken the wind out of the sails of most of the technology issues. And I'm really going to say the big tech technology issues. So we've seen the FANG stocks really taken on the chin, with Facebook going down over 20% since its high in the beginning of February. So we've seen that. The NASDAQ lost about 5.39% this week, and that's pretty important. But again, we didn't see flows that were oversized at all, and so I think people are putting this in perspective. Let's take a look at the news impacts and how they influenced our weekly flows trends. Let's take a look at our macro groups first. Equity funds saw about $1 billion in outflows. Again, not too bad considering the landslide we saw in, if you will, in the technology arena. We saw taxable bond funds lose about $1.1 billion. A little head scratcher there considering we saw about a 12 basis point decline in the 10-year. And then muni bond funds took in about $211,000, which actually equates to a rounding error or just about zero. And a money market fund saw, as I said before, kind of the only big inflows, $2.4 billion in net inflows into the money market arena. Well, let's take a focused look on the macro groups one by one. Let's take a look first at equity funds. Equity funds saw about a 3.34% decline for the week as far as returns go. It's the second consecutive week they've actually suffered negative returns. And they saw about $993 million in outflows. Second week in three, they've seen outflows. If we take a look, the story that Pat and I have been sharing with you over the last several months and years is that the domestic equity funds took it on the chin once again, $2.5 billion in outflow, fifth consecutive week they've seen outflows, and they had a 3.82% negative return for the week as well. The reason I cite that is when we take a look at non-domestic equity funds, basically we saw about $1.6 billion in net new money come into that group. Second consecutive week they've taken in new money, but it's only had a 2.5% loss as well. So why it would take in that much money while it was just if you will, a percentage point difference in returns, it's kind of a head scratcher. But anyways, that saga continues. People are continuing to flock towards the international or non-domestic equity side rather than the domestic equity funds. If we take a closer look though and get down to the macro groups, basically we saw large cap funds losing the most. That's been a long-term story. About a $1 billion outflow this week, and international equity funds took in about $1.2 billion. Again, that's a story we've been talking about for quite some time as well. Let's go ahead and take a look at our ETF arena now and talk about equity ETFs. Second week in a row, they've actually seen outflows, this time to the tune of $13.4 billion. And at the top of the group, as far as taking money in, we saw a new issuance. Came out on March 18th, 2018, the Barclay ETN and Fixed Income Enhanced Global High Yield Series B ETN basically took in $1.5 billion. That was the only big inflow that we saw. We did see the industrial select sector spider funds taking about $619 million. And if we jump down to the very bottom of the slide here, we see the SPY, Spider SP 500, basically handed back about $5.4 billion. And we saw that the iShares Core S&P 500 lost about $5.2 billion. And the other two names on that slide also saw pretty big outflows as well. So that would bring us to that $13.4 billion. Well, let's move our attention now to the fixed income side of the arena. And fixed income funds for the first week in four saw about $1.1 billion in outflows. Second consecutive week that they've actually seen net outflows. This time, though, if we take a look, they only lost about, for the second consecutive week, we saw a negative performance, 0.34%. It was the first week looking for that we've actually seen outflows. If we take a look, though, corporate investment grade debt funds actually took in money, about $302 million. It is the fourth consecutive week they've seen net new money come into their coffers, and international global debt funds took in about $133 million. Now, on the bottom side of this, we saw corporate high yield funds hand back about $527 million, and government mortgage funds lose about $463 million. Let's turn our attention now towards the ETF side of this story. ETF fixed income funds basically saw inflows, about $1.2 billion. Second week in 3, they've seen net new money come into that group. And at the top of the group, we saw the iShares short Treasury bond ETF taking about $849 million. And then we saw iShares floating rate bond ETF take about $188 million. At the bottom of the group, though, we saw, and this has been there for quite some time, the iShares iBoxx investment grade, dollar investment grade, corporate investment grade bond fund ETF lose about $512 million. Again, that story has been pretty persistent. The dichotomy, though, here is that fixed income investors actually put money to work in the fixed income side, while the conventional fund investors did not. They were net redeemers, as we just said. Muni bond funds, though, if we take a look at them, they basically saw net inflows, but it was really to the tune of $211,000. So again, as I said before, almost a rounding error. It is zero. But it's the fourth consecutive week they've seen net new inflows, and it's the first week in 3 that they've actually saw plus up returns, this time to the tune of 0.27%. And the major attractor of investors' assets was high-yield muni bond funds, taking $154 million, and the single states were the biggest losers there, and it really got us to that net number of plus $211,000. Well, let's turn our attention to our last category, and that's money market funds. Money market funds, as I said, saw the only net inflows, $2.4 billion. That's if you ignore the $211,000 by muni bond funds. But money market funds for the first week in 3 basically saw net inflows, again, $2.4 billion. And how it broke out, taxable money market funds took in about $3.8 billion. And if I broke that down any more focused area, we saw institutional funds taking about $7 billion, while the retail investors took out about $3.2 billion. Tax-exempt money market funds, so about $1.4 billion leave their coffers. Well, you know, today is Good Friday. It's closed, markets are closed, and basically our phones are not ringing, so we're assuming that most people took the day off. We're going to keep our eyes, obviously, on what's coming up over the next several weeks. You know, the first big news we'll have is the employment reports in about a week and a half or a week or so, and then obviously in about a week and a half to 2 weeks, we'll see the first real big push in the Q1's 2008 earnings reports. And I think that's what people are going to keep a big eye on, to be honest with you. Right now, what seems to be driving the markets is politics and the news, and again, Facebook being a big portion of that news, at least right now. Once we get back to looking at fundamentals, I think that'll change the tune, and I think we're actually going to see some rebound, and maybe even some of those big tech stocks that have slid so large and so wide from their highs in early February. Well, that's it for me, but if you want to take a deeper dive into some of the classifications or categories that I did not discuss, you can go to our site at www.lipperusfundflows.com, or you can join us next week where either Pat or I will tell you about the fund flows trends for the week. Thanks for joining me. My name is Tom Roseen, wishing you the best in your wealth planning and creation.